Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And Bitcoin got a little bit of a dip to the downside to recover that wick from the previous V-shaped recovery we had from that 41.4 area. So we stopped just shy of that at 41.7. And are we going to get back into this channel? We dropped down into the 706 of this diagonal pitch fan we've had price in for over a year. Let's go figure it out on high block. What is high block? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are, so let's do it now. So they came down to the pixel and came and grabbed this $165 million character at 41.735, and they liquidated that 100x pool of 165 million.
Fatality.
And with that, they V-shaped back up, now taking out $40 million in short liquidity that opened up here at 42.122 at the bottom.
Fatality.
Do we continue higher is the question. They've induced some other pools that if they come back above 42.432, then they could be aiming at coming up into this range that we were talking about before at the 44K region. We have a large pool up here, 189 million, that is stacked up here at 43.633, and 44.05 has a pool up here. There is a fair value gap up in the 45.202 region, 170 million pooled up here with some other shorts that we could come back into. Short liquidity imbalance on the 1 minute time frame is at 17 billion as we lose stuff to father time and go into the 7-day. Now the 7-day basically took out all the liquidity down here, and they are inducing some more. There is some billions down here in the 41.2 region, but also some billions up here in the 44.5 and above. And if we go to the monthly is where you could possibly see a drawdown to that 39K region, which we are also pointing out for days now, which could occur, but we could be coming back into some of the liquidity up here at 44.4, at least stopping out some of the shorts. There is a large pool, not so large, not even double digits, up in that 50K region. Maybe these are the pivot shorts after they scared out a majority here. That could be the protected position now as they aim at 39K. Overall imbalance on the monthly is to the downside, so watch out for your longs, as you see here on the 3-month, also getting that thick band, possibly on the chalk being block below. Let's go see what, so even if we come up to this point of control at 43.6, do we manage to get above into the liquidity, or is this just a bearish retest to come lower? All right, let's go into what we were looking at on our yesterday. I deleted it only because it was not in the time that I was looking at, but the order in which I was looking was coming to the downside to recover the wick and possibly coming up to here. So if you recall, I was talking about coming lower, coming up, and then basically possibly going up into here. If you go down to go up, and you go up to go down. So if we were going up to 44K and hitting this, I was saying we would likely come down to this region. If we go down first, we could stop in this double bottom area on the wick and possibly come up into here. With false move Monday, January 15th, it is entirely possible to meet the expectation and come up into here. Do we get above this 236 as it stands right now? Let's go on a higher time frame. It's harder to pull back. So this 236 we were talking about over here at the 42,114. If you manage to hold this 42,114, you could be on a bullish trend-based fib level continuation idea. The last time we wicked off that, we did go higher. This is a little bit more bearish in nature, so this thick vector candle engulfing of this entire range, suggestive of a possible fade down into this region to sweep the longs here. So ultimately looking for a short entry. Could have taken it over the weekend. I don't really trade on the weekends, but let's go ahead and take a look at the total market cap. First, let's throw on our oscillators here. Let's go ahead and throw it on. Link in the description for more. Scroll down to features, toggle everything at your leisure to see Bitcoin's bottom and the schematic for looking for a long, this double bottom idea, coming back, reclaiming the cloud, seeing the baselines flip underneath the price with some 5 and 6 time frames oversold, possibly some rockets, and boom, to the upside. Let's go see what it looks like. What do you know? Some 5s here on the 12-hour closing for that V-shaped. Coming to the 6, got some 5s with the liquidity grab. Coming to the 1. Coming back to that wick, getting some oversold time frames, locking in on the hourly. And here is where you start to see more of those 5s and 6s insinuating a long bounce idea up to here on that double bottom play. So let's go ahead and expand right now. Let's look in the moment right here. So if you were here about 3 a.m. my time, which would be about 4 p.m. in the afternoon for the Americans, you would have seen this cross down event. Each cross down here too, cross up, cross down on the 15 had given you a little bit of that sauce. If you were seeing you're not coming above this level, you could have considered shorting. One other thing to note was we were crossing down here on the hourly and then not holding the hourly cloud. So if we break down at the cloud, you trade with that cloud to the downside. And yeah, so that is the hourly time frame. Let's go ahead and take a look at how the 3-day closed. I think it might have closed, oh no, it closes tomorrow. So interesting. Did we get an acceleration of this cross down event from December 15th? We had a mighty bearish close of the last 3-day. Does this 3-day take us down to 39K? Do we break this 236? Are the bulls interested in protecting this level or letting it sink down to sweep all of the other late longers off the table? I'm more bearish than bullish. We were going over this idea of coming up to come down and eventually see that retrace on the 3-day time frame. This is from April. July, we had the cross down event, which also retraced 18%. The cross up gave us this play with the rocket ships in September. That was your ideal holding of the baselines here on the 3-day. Here you have the opposite effect with the baselines above the price. So this is looking for that short opportunity to retrace back down again on the 3-day time frame. The tapering effect on the cloud here on the 3-day, you have 13% away. It's also curving to that 2 o'clock angle, still overall pointing bullishly to that 2 o'clock. So you're still ultimately in an uptrend. Before we go any further, let's go to the weekly time frame and go ahead and turn off the oscillators and take a look at it in its completion, shall we? Let's go to a clean chart. So that was basically a shooting star to the downside. You can do it in the direction, a fib retracement in the direction of that, and do a shallow retrace. If this 382, if the body closes beneath the 382, that is a official shooting star. So this is a bearish week after seeing multiple weeks to the upside, over 2 months of upside with a few consolidation weeks, and now a massive stop hunt drop to the downside. All right, so we had that going for the week. If we come back and throw on our oscillators and see what the oscillators look like on the weekly starting to reset on the stochastic, money flow, and RSI even Steven levels, possibly coming lower. The money flow slightly above the RSI. Had a large volume in that last week play out. A lot of players exited their positions, most likely positioning for lower prices, as it is in a premium price range. If we go to the weekly cross down event starting to flash on the baselines, what do I mean by that? Well, if you look here on this oscillator, you have these leading moving averages crossing over the other baseline here, giving that first insinuation. So if this last week closes beneath these baselines, you're going to have an official cross down of the weekly time frame. When was the last time we had something like that? Well, we had the cross down here in May, and then it surged back up, but eventually retraced 18% and sputtered until we crossed back up in October. So it just tells you there's a potential pause coming for the upside play on the weekly time frame, which could lead to sideways and or range bound action or downside action. Okay, so if we go to the daily time frame, we already looked at the 3-day daily time frame, already getting its cross down event here, as you see the baseline getting a cross down here, confirmed from that candle. Also stochastic reset and Williams in a low position, oversold, potentially looking for a dead cat bounce slash liquidity grab to the shorts one last time, scare them out. Let's see, 12-hour time frame. Well, we skipped the 22. Let's go to the 22. 22-hour is showing a thinning cloud and the tapering effect of that cloud potentially showing signs of abating upside potential. All right, and going to the 12-hour. 12-hour very much the same. 12-hour time frame is oversold. Williams in an oversold state. We could be looking for this oversold 12-hour slash 6-hour play, at least for a interim play to the upside. You do have this money flow imbalance on the 6-hour here. What do I mean by that? This money flow beneath the RSI coming up to the RSI is something we back tested to be true. Here's another instance right here. It's happened many times on the live stream where we see this money flow coming beneath the RSI and then it gravitates back up and boom, you see the price action boom thereafter. Okay, so do you see very much the same boom with that money flow insinuation play on the 6-hour time frame? Let's go to the 4 to see what that looks like. 4-hour is also seeing this money flow beneath the RSI, possibly coming back in here with that nice entry on that wick recovery. Got the MACD and the Williams in an oversold state looking to rise. It's been a while since we've seen the Williams in such a low condition. The last time was over here in December 18th for this double bottom play, and boom, we went up a little bit. So would not be surprised if the 4-hour played out here. Coming to the hourly time frame, looking to also see some time in the sun. Once again, it is false move Monday though. Be wary of any play. Last time we were seeing some downside and we said be careful of your shorts. Here I would say be careful of your longs. So even if we come up to here, this could be a bearish retest and we could just dump right back down. Let's go see what the liquidity brought in. Let's see where some potential short opportunities might present themselves. 44.054. 44.054 is up in here. Let's go ahead and mark it off. 44.054. So there is that large pool of liquidity in here where we could potentially fade. Getting a buyback of this last hour dump here, coming back above that 236. Do we see a reclaim of this region? There is no market open for Martin Luther King Jr. Day, so the banks are closed, so there is no indices or futures trading today for New York. So it is a short down a liquidity pool. It's like a 3-day weekend. So do we see some pullback and kind of hold in this range? That is the question. I'd need to see some sort of conviction above here and hold it similar to this for me to be interested in this continuation long idea. All right, let's go to the broader markets. 15-minute is doing its thing, starting to rise up here, possibly cascading to the hourly. And yeah, you could go even lower than that if you want. Everything's fractal in nature, so if you go down to the 5-minute, you can see this baseline crossing up here, holding the price, almost scooping it up, and you start to see it fatigue here. But then when it starts to fatigue, it comes back and it kisses the cloud if it's bullish and continues around this point. And this is what we see all the time on all the time frames. You see this rise, retrace, continuation if it is going to play out, and that is basically this schematic over and over again. You rise, you retrace, you come to the upside, rise, retrace, continuation if it is bullish, and conversely if it's bearish. All right, so that's how you would be monitoring this in the moment. But let's go to the broader markets for the broader play. Let's look at the USDT dominance. USDT dominance coming lower. After knocking people out, let's go ahead and see what we can see. Coming back to the 236 level of the bearish trend-based fib. So we are breaking through to the other side of this spectrum here. Oops. So this has basically played out now. Let's go ahead and clean this up a little bit. So we were watching for that point of interest play to come down to that region, and it did, into this gap down here, these wick regions. So this is clean play there. All right, so we basically saw the rocket ship close on a 12-hour time frame. It liquidity grabbed down here at the highs for BTC, and now it's starting to come back up. You have reclaimed the 12-hour cloud here on the USDT dominance officially with that candle, and now you're back above this adaptive moving average, which is think of it as a VWAP on the 12-hour time frame. Previously butting our head, rejecting, butting our head, fake out, come back down. Now we are officially above it. So the USDT dominance showing some strength, which is to say people getting knocked out of their trades into USDT. So even if we come down to this cloud, we can look for some strength to possibly continue up into this region. So ultimately, this cloud looking to market rotate to the upside on USDT dominance, as in for BTC, it would be looking like this. they are inversely related. So you would be seeing Bitcoin doing this to the downside, right? Okay, so we go to the Bitcoin dominance, but it's also for the whole market, so it would have this for alts too. The reason why it was going sideways was people were washing their profits into Bitcoin or into the alts. So on this entire daily impulse up here, sometimes it shifts it, it's really weird. So this impulse to the upside here, we're coming back into a golden pocket region after sweeping and coming back to this consolidation zone. Dominance dropping, giving the alts a little bit of space to play ball over the weekend. The alts still holding this range, potentially coming higher. The reason being is ETH BTC was what we were looking at of most of all. Reason why ETH is bullish is because ETF stuff for ETH is up next on the buy the rumor, sell the news event. So ETH has been seeing the strength hold. We were talking about that back here with that 618 bounce from January. And we came up to the deviation of this impulse here at 2701. We were talking about that being the fatigue point due to some range over here. And yeah, if you recall that being the case, still could go higher as ETH and the alts still hold this cloud. Starting to give the insinuation of some weakness here though by this cloud curvature here on the daily. If we start to see this acceleration beneath the cloud, then you could be getting something in the manner of a BCA. So we already came to some levels here. We're still in a bullish trend with this impulse retrace on the daily time frame for the alts. So the alts are having the rally. Do they maintain these levels on the bullish path or fail the cloud and break down? That is the question. If we take an impulse retrace for the other idea, taking this drop to the downside, rise to here, you would have to, there's some overlap with the 706s, but it would basically be this 236, this 503 billion, the 50283 right here, this $503 billion range needs to hold for it to be bullish. So this is your 236 / overlap confluence region for a short on the altcoin market. If we cannot maintain bullishness above this level, then this is basically your bearish trend based fib, and you could be possibly extracting down to this level. Okay, so let's look at the dollar. Let's see if the dollar is doing its thing. It's open. Do we have any news today? Let's go ahead and take a look at the news for Forex Factory. Okay. Not really much going on. Got some news on Canadian stuff. Canadian dollar, CAD, German, next tomorrow. Could have some reaction. It is a red folder for Forex people. CPI for the German currency and the euro. So America has some stuff coming basically on Wednesday. So a lot of stuff on Wednesday. Australia and the unemployment claims for America on Thursday. So we have some news plays coming up throughout the week. Good to keep abreast of that. So we're still range bound for the dollar, deciding whether we're going to come down to this gap and fulfill that or come up into this one. All right, if I had to put a gun to my head about the dollar, I would say, based on our wickage, I would say this comes down a little bit more before you come up to here. We wicked into it first, but this wick is closer by. You did have a draw up here and reject, so we could come back down to test this low one more time and then go up to that region. This would be the narrative of things going up. But basically at a point of ambiguity for the dollar. Let's go see what you guys have to say in the chat, and then we'll see what's going on. What's up, Steven? How's it going? You guys have anything you want me to look at? MADI and whatnot? MADI. Okay, so we were looking for MADI to reach a certain level here up. They were in a bearish trend on this 236 after this nuke. The 236 had you at hello for the short idea. We came lower. We were looking at a double bottom idea here in the cross up of the hourly cloud here. We were saying this was a nice reclaim of this cloud. You had this cloud reclaim here and then boom to the upside, but ultimately could not make it above this range here. So the 96-cent range, you couldn't make it above. This 236 of this bearish projection has been honored still. So you're basically coming back down. Let's go ahead and clean it up because it's pretty much been in this range for a little bit. So we can basically use new retrace tools to figure it out. So let's do that now. Let's go ahead and clean it up and go to the higher time frame for MADI. First, we're gonna kind of remove everything and do the math first. 3 pillars of trading: the math, the liquidity, the math, and the momentum. We don't need the momentum on while we are looking at the math. So let's go ahead and look at the math. So came up to that 95-cent region. We had a previous area of interest up here on this wick at 105. We wicked off of that, as you would for reclaiming a point of interest up here. Okay, so that was where we rejected off of. We have this impulse to the upside that we are respecting so far, and we didn't manage to get to that deviation level, surprisingly enough. If we use this only, then that deviation becomes apparent here. So this is the impulse we're on right now. So we came back to that golden pocket multiple times. 1, 2, 3, 4. We've been touching up against it. So we could possibly be coming down to a deep retrace. If the markets are doing what I think it's doing, then you could be coming down in this manner, coming to the 786, kind of sweeping all of the longs off of the table here. There's a large amount inside of here that they could just sweep up at the 786 level. Let's just go ahead and look at the liquidity for MADI real quick. Let me have some coffee while it loads. Coffee is good. So let's go to MADI real quick. Boom, boom, boom. Yeah, so you have like a band of liquidity for the longs down here at 73. You do have some shorts up here, of course, but you're always having stuff on both sides. The imbalance to the tune of 106 million in short liquidity up here. So overall, you're getting a rounded top, suggesting you want to stab down into this liquidity down below. There's a few $1 million traders pooled up here on these equal loads, which we have not swept yet. So going and sweeping those guys off the table, at least in this range here. This is the immediate range on the 1 minute time frame. If we go to the higher time frame for MADI, let's go ahead and do that. MADI. Okay, so yeah, you got a large amount down below. 7-day time frame. You got a thick band that's up here in that 96 region, these positions, but you're just a hop, skip, and a jump away from this 82-cent pool, and even lower at that 76-cent range. 76 was what we were looking at. This is a daily support structure at 77. We had multiple touches. We can kind of move it down to here. Okay, and yeah, that's multiple instances where it reacted off of this daily support level. So basically, could we come down into these regions and sweep up some of these longs? The structure is kind of ugly on both sides, not really liking the structure right here. It's a seek and destroy both sides type of pattern. Not really my sauce for longing or shorting. Like, the confluence for the short was up here with this deviation and this resistance level up here. Now you're in kind of an ambiguity zone for either side. Could go against you on either position you take. So basically charting out a plan for where you would want to long, potentially at that 69 cent or even at that 706 sweep, like down here, sweeping these wicks off the table and coming down to this region. So we'll be keeping MADI on the back burner for that instance. We did tell you about that for other coins, like just to note, one example was Bonk. We were talking about getting into Bonk down here at the 618. We were saying, come talk to me when we're back down here. And sure enough, when we were back down there, boom, we went up to the tune of 88%. So, you know, somebody was asking up in here, and I was saying it would make more sense to come down into this pocket. So yeah, same thing with MADI. You gotta patiently wait for that play, perhaps. I know you didn't ask specifically, but I remember you asked for MADI in the past. So any other requests while you have me? Anyone? All right. Well, we are going to see where this candle closes. We had the candle close above that 236 for that bullish trend base fib level to continue. So are we going to continue on this merry path to the upside just to stop out the shorts? Ultimately, I am bearish for the short. So do we see a push up to that 44K $315 million character now? They have induced some shorts, so they have to tire out the shorts now. So coming back to 43,107 and their partners in crime at 43,590 and ultimately up to 44,050 or 054. And then they have some pools up here for a fair value gap attack at the 45.2 level. Do they come and clear this entire 45K up to 45K region? We will see. First things first, with the low liquidity down a pool, do we come up to here for London? London retraces, holds a zone here, and then you could possibly see that strength enter here. Oh yeah, we got to turn on our oscillator. So that would also be lining up with this cloud coming down further and over here, and this would follow the path we were pointing out over the weekend of how the clouds and everything operate. Takes time to percolate, doesn't happen overnight. Sometimes it does, but for the most part you see the cloud come back, and then you'd need to see some strength of reclaiming this cloud and then retrace and kiss the cloud, and then you'd be gone. And that's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff